In less than a month, Bitcoin will undergo its fourth halving, a pivotal event that significantly impacts its supply and demand dynamics. But is now the perfect time to buy Bitcoin? Imagine a digital gold mine, where miners are rewarded with Bitcoin for verifying transactions. Every 4 years, this reward is cut in half, an event known as Bitcoin halving. Fascinating, right? This halving reduces the rate at which new Bitcoins are created, making them more scarce and potentially more valuable. Picture this, if gold miners suddenly found out that they would receive half the gold for the same effort, wouldn't that make gold more scarce and perhaps more valuable? That's the theory behind Bitcoin halving. It's a pre-programmed part of Bitcoin's DNA, designed to control inflation and keep a cap on the total number of Bitcoins that can ever be in circulation. A maximum of 21 million to be exact. So, with the halving event on the horizon, the big question is, should you invest now? Historically, Bitcoin has experienced significant price surges in halving years, with average gains of 125%. Now let's travel back in time and peek at Bitcoin's behavior during its past halvings. The first halving in 2012 saw Bitcoin's price skyrocket from around $12 to over $100 in a span of a few months. The second halving in 2016 propelled Bitcoin from around $600 to nearly $20,000 by the end of 2017. And the most recent halving in 2020 saw Bitcoin's price climb from around $8,500 to an all-time high of around $60,000. These dramatic price increases were not merely coincidental. They were primarily driven by a reduction in Bitcoin's supply, coupled with a surge in demand. Moreover, the year following a halving has seen even more impressive returns, averaging a staggering 415%. Renowned crypto analyst Benjamin Cowen's recent observations suggest that Bitcoin's performance in 2024 is surpassing previous halving years. Experts in the field are buzzing with anticipation, citing unique factors that could make this halving cycle different from the rest. For starters, Bitcoin's availability on exchanges is dwindling. This scarcity could drive up demand, making each Bitcoin more valuable. Additionally, the recent green light for spot Bitcoin ETFs has opened the floodgates for institutional investors, potentially injecting a new wave of capital into the market. Other experts point towards global economic factors like inflation as catalysts that could spur further growth. But remember, the crypto market is volatile and unpredictable. Despite these promising signs, it's crucial to approach with caution and do your own research. With fewer coins available on exchanges and the approval of spot Bitcoin ETFs, this halving could be an anomaly in Bitcoin's history. While the potential for gains before a halving is undeniable, it's crucial to adopt a long-term investment approach with Bitcoin. Just like any other investment, diving into the world of Bitcoin calls for a well-thought-out strategy, and history has shown us the value of patience. Now let's crunch some numbers. When we look at the data, we see a consistent trend. Holding Bitcoin for at least 4 years has resulted in annualized gains of 30%. That's right, 30%. This isn't a one-off occurrence, but a pattern that's been repeating itself over the years. So, what does this tell us? With a long-term investment strategy, you're not just betting on the halving event, but on the overall growth of Bitcoin. This approach has been shown to outperform traditional investments like the S&P 500. Data shows that holding Bitcoin for at least 4 years has consistently resulted in annualized gains of 30%, outperforming traditional investments like the S&P 500. As the Bitcoin halving approaches, investors should consider the cyclical nature of Bitcoin's price movements and focus on long-term holding strategies. We've delved into the fascinating world of Bitcoin and its upcoming halving, a critical event that significantly influences the supply and demand dynamics of this digital asset. Historically, halving years have witnessed substantial price surges, with the following year often reaping even greater returns. Renowned crypto analyst Benjamin Cowen's observations suggest that this halving cycle might outpace previous ones, owing to fewer coins available and the approval of spot Bitcoin ETFs. However, let's not forget the importance of adopting a long-term investment approach with Bitcoin. Data reveals that holding Bitcoin for at least 4 years consistently results in annualized gains, often outperforming traditional investments. In the face of the crypto market's volatility, patience remains an investor's most potent tool. So as you contemplate your investment strategies for Bitcoin, remember to stay patient and focused. Remember, patience is key in navigating the volatility of the crypto market. Happy investing.